If you worked from home this year, the ATO owes you a tax deduction. Most Australians know this. What most Australians don't know is that the ATO quietly changed the rules in 2022. And the way you've been claiming, possibly the way your accountant told you to claim last year, could be leaving you hundreds of dollars short. Today, we're reading the fine print for you. According to the ABS, over 40% of Australians worked from home at least some days last financial year. That's more than 5 million people, every one of them entitled to make a claim. Most won't claim the maximum they're entitled to. Here's why this matters in dollar terms. A full-time work-from-home employee can claim over $1,286 in deductions under the correct method. A hybrid worker, 3 days from home, can legitimately claim $450 or more. If you've been estimating your hours, defaulting to whatever My Tax suggests, or using last year's figure, you're almost certainly leaving money in the ATO's pocket. And if you've been keeping records the old way, you may not be keeping them the way the ATO now legally requires. Here is the specific mechanism. In 2022, the ATO replaced the old 52-cent per hour fixed rate with a new rate of 67 cents per hour. Practical Compliance Guideline PCG 2023/1, a document the ATO published with minimal fanfare, lays out exactly what this means. Under the old 52-cent rate, you claimed 52 cents per hour for energy, furniture depreciation, and cleaning. And separately, on top of that, you could claim the work-related proportion of your internet bill and your phone. Under the new 67-cent rate, electricity, gas, internet, stationery, and computer consumables are all bundled into that single number. There is no separate internet claim. There is no separate phone claim. It's all inside the 67 cents. If your internet plan costs $100 a month and you used it 80% for work, you were previously claiming an additional $960 per year. Under the new system, that additional claim no longer exists. For some Australians, the new method pays more. For others, particularly those with high phone and internet costs, the old method was better. You're now locked into 67 cents regardless. But that's not all that changed. Under the old system, the ATO accepted a representative 4-week diary. You logged your hours for 1 month, they extrapolated for the year. Under PCG 2023/1, this approach is explicitly gone. You must maintain a record of every actual hour worked from home. Not an estimate, not a pattern. A real log, your work calendar, your timesheet, your roster. These all count, but guessing doesn't. Let's do the maths. Count the days you worked from home this financial year, multiply by your average daily hours. That is your log. Example, 3 days a week, 7 hours a day. 21 hours a week. Over 48 weeks, minus leave and public holidays, that's just over 1,000 hours. At 67 cents, $671 deduction. Full-time from home, 8 hours a day, 5 days, 48 weeks, 1,920 hours. At 67 cents, $1,286. Go back through your work calendar right now. Count the days. Multiply by your daily hours. That is your number, and it takes 20 minutes. You also need at least one document showing you incurred the types of expenses the rate covers. A power bill in your name, an internet bill. Not 12 monthly statements, just evidence you paid for these things. There is a second method. It requires more work, but for some people, it is worth significantly more. The actual cost method lets you claim the real additional expenses your home office generates. This includes the electricity cost of running your equipment, calculated by your appliance's wattage, your tariff rate in cents per kilowatt hour, and the hours you used it for work, the work-related proportion of your internet plan, the work-related proportion of your phone, cleaning costs for a dedicated room, and depreciation on your desk, chair, computer, and monitor. Use the actual cost method if you have a dedicated room used exclusively for work, if you bought significant equipment this year, or if you work from home full-time with a high electricity bill. If you work 2 or 3 days a week at the kitchen table, the fixed rate method is simpler, and the difference will rarely justify the additional record keeping. Now, what the ATO will reject: coffee, tea, food, private expenses, regardless of where you're working, consistent ATO position, rent or mortgage interest. You cannot claim occupancy expenses as a working from home deduction under either method. And there is a narrow exception for genuine home-based businesses with a space used exclusively for income-producing activity, but claiming occupancy expenses can reduce your main residence capital gains tax exemption when you sell. Do not go near this without a registered tax agent. Equipment used for both work and personal purposes cannot be claimed at 100%. A laptop used 60% for work. You claim 60% of its depreciation. Internet installation costs, not claimable. Only ongoing usage and only the work related proportion. The ATO's data matching program sees your employer records, your bank data, and your government payments. Claims that can't be substantiated will be disallowed. Under the fixed rate method, keep a log of actual hours, your calendar, timesheet, or roster. Keep at least one document per expense type: a power bill, an internet statement. Under the actual cost method, receipts and invoices for every expense, a log of hours for the electricity and phone calculations, evidence of how you calculated the work-related percentage. Keep all records for 5 years from the date you lodge. Section 262A of the Tax Administration Act 1953 requires this. The ATO can amend an assessment for 4 years, which makes 5 years of records your safe minimum. To lodge in My Tax, deductions, work-related expenses, other work-related expenses, enter your calculated amount. If the ATO has pre-filled your return, your WFH deduction is not in there. Pre-fill captures your employer payment summary, bank interest, and dividend income. It does not capture your working from home claim. You enter it manually. If you're using a registered tax agent, give them your hours and calculation, not just I worked from home. The cleaner your input, the faster and cheaper your return. 3 things to do before June 30th. 1. Log your hours today. Open your work calendar. Go back to July 1st last year. Count every day you worked from home. Multiply by your average daily hours. Hours times 67 cents. That is your deduction. Write it down before June looks like a blur. 2. Choose the right method. If you have a dedicated home office, bought significant equipment this year, or work full-time from home, run the actual cost calculation and compare. Use whichever is higher. If you're a 2 or 3 day hybrid in a shared space, the 67-cent fixed rate is almost certainly your simplest and best option. 3. File it correctly. My Tax, deductions, other work-related expenses. Your WFH deduction will not be pre-filled. You must add it manually. If you want to verify your entitlements against the ATO's own tool, search Working From Home Calculator at ato.gov.au. Free and accurate for this specific question. One more thing while you're doing your financial admin. If you've never checked your super fund's fee structure, the link in the description takes you to an independent comparison. It takes 2 minutes and it might save you significantly more than this deduction. If this video changed how you think about your tax return, subscribe. We post new videos every week breaking down the financial stuff your bank, super fund, and insurer hope you'll never figure out. And if you want it in your inbox, we run a free weekly newsletter called The Fine Print Digest. The link is in the description below. Not financial advice, just the information you deserve to have. See you next week.